Cathie Wood, star stock picker and founder of ARK Invest, which has over $60 billion in assets under management, and invests in innovations like self-driving cars and genomics, has been in the news, and this time, it looks more gloomy and dramatic as she battles The Big Short star Michael Burry to defend her stance and how the stock market crash will happen. Cathie Wood is an experienced fund manager with decades of experience. She rose to investment stardom in 2020 when her investment firm announced industry-high returns of 153% in her ARK ETF for their clients in 2020. Her firm also averaged an annual return of greater than 40%. Cathie believes we are on the verge of a stock market crash. So does Michael Burry of The Big Short. Even though both disagree on certain terms, it's obvious they agree on the prediction of a crash. However, she doesn't believe it is all doom and gloom. And if well played, anyone can actually profit from it. We will dive into details about how this is expected to happen and how to prepare. Welcome to our channel, and make sure to subscribe for more content. The Second Industrial Revolution, sometimes referred to as the Technological Revolution, is perhaps the best thing that ever happened to humanity. Starting from the late 19th century to the early 20th century, various technological changes and advancements occurred, allowing us to live better lives now. This included the development of iron, steel, rail transport, electricity, the development of machines and mass production, petroleum, automobiles, and many more technologies. These eventually led to the development and maturing of the internet, which created a bubble. The bubble of the 90s, also called the dot-com bubble, is part of the top 3 disasters of modern times, including the 2008 market crash and the 2020 coronavirus. But the question presented is, are we on the verge of a stock market crash? And if yes, how do you prepare? Let's take a few steps back to look at what a crash is. A stock market crash is worse than a market correction and happens when there is a general and sudden downturn in prices due to an unexpected event. A correction is similar to a crash, but not as worse as a crash. In a correction, the index goes down, but only 10% from its 52-week high. As to whether we will be experiencing a crash or a correction isn't clear. Cathie has used both terms in interviews, and we cannot be sure. But what we do know is when they do come, you do not want to be backing the wrong stocks, right? Cathie does mention rates a lot in defining her predictions. Interest rates are going down, and the Fed cannot keep printing money. Even though Cathie says we are not in inflation, as deflation will eventually set in, it must be noted that some industries are experiencing some low rates. The S&P 500 forward PE ratio, which is a 12-monthly prediction of the top 500 companies, is currently on a downward trend, with a forecast predicting it to fall to 22.22 for Q4 of 2022 from a current value of 28.83 in June 2021. Also, another major reason is the rise of disruptive technology, most of which are in their early days, but have the potential to fully replace their current competing industries, called black hole industries. The main focus area of Cathie Wood's firm is on disruptive technologies, which they have put into 5 innovation platforms at ARK Invest. And this is a good strategy considering that most of these platforms are predicted to become multi-trillion-dollar platforms. Note that it isn't industries, but rather platforms she refers to. These disruptive technologies are DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. Evidently, these technologies are big deals and are definitely worth the valuations on them. The dual threat and opportunity problem here is that as these disruptive technologies are adopted, the black hole industries decline until they pivot or die out. And this, on large scale, could be the cause of a crash or a correction, since most of the dying industries are valued higher than they should be. Their price and PE ratios are currently overvalued, and once things begin to get real, their prices will adjust to beat the market. The inflation rate in the U.S. has risen to 5.37% in July 2021, up from 1.40% only in January 2021. This increase is almost 4 times the rate at the beginning of the year, and this is worrying as the general price level affects the economy and could create an environment for a crash. However, experts believe this will soon go down as the money supply is slowly being cut down. Cathie Wood believes we can benefit from the crash with a less-than-expected strategy. Her unconventional strategies have often got her into intellectual battles, but she has always believed in what she says. Her strategy is simple. Concentrate their portfolio on the highest conviction names or companies when the crash does happen. But for the time being, buy low valuation stocks right now, which is basically stocks of companies that are doing well but their stocks are undervalued. Then sell them when the crash occurs at lower market prices. With the sale of the low-value stocks, you will be able to purchase stocks of high-conviction companies, which have more potential to grow after the rubble sells. Her strategy is basically to keep your money in the market, but on the good companies with unfair valuations and stock pricing, which you can trade for high-value stocks, which would have decreased in prices during the crash. This is pretty genius, as currently buying low-value stocks keeps the bull run for as long as it can while ensuring that you can take advantage of the crash when it happens. Conclusion: the thing about a crash is that we cannot always tell when exactly it will happen. But if there is something history has taught us, it would be that there are always signs, and some people are bound to spot them. Do you think Cathie's analysis and prediction are right? Let us know in the comments below, and see you in the next video.